Hello, I'm Jason Strongerhead. Welcome to my part 3 of Should You Sell in May and Go Away? If let's say really there's a chance that the market is going to come down, right? What can you do? It's very important that we have planning ahead, right? So that we will be able to not grab the opportunity because the opportunity is only for those, right, who are really on the dance floor, remember? Okay, so let's take a look at the chart, right? Previously, I showed you the short term, the mid term, and the long term. So what will be the scenario? To me, really, because of all the different layers of protection, right? I feel that the probability of it dropping about 1 to 2,000 points, maybe max 3,000 points, will be high lah. Okay, that means this is not going to be a double bottom, it's just going to be a pullback lah. Okay, and would it drop to about 16,000 range? I would say 50-50 lah. Okay, and would it drop to maybe 4,000? I would say rare lah. I don't think this is going to be possible. Yeah, but we will never know what's going to happen, right? So what are you going to do if let's say these are the three scenarios that really hit? Okay, so I'm ready. Yeah, the first scenario will be do nothing. The second scenario will be can do something. The third scenario will be then must do something. So really do nothing. What am I going to be doing? Some people say, are you going to sell? No, I'm not going to sell. So I'll tell you when I would sell. My decision to sell, only three reasons. The first one, right, if I'm on leverage. So if let's say you have leverage and when you meet situation like that, especially the second one and the third one, this scenario, you better sell, no, because you will have to avoid margin call. Okay, so you better sell. The second one, if you're holding on to companies that are lousy or the fundamental have changed right, after this entire incident, then maybe you need to let go. You know, even Warren Buffett sold away all the airline share. Okay, so you may want to let go because you feel that the chances of them making money will be lower already, and you probably will be holding on to the losses for a long time. The third one is you have no choice. You need the money for emergency, maybe personal reason and things like that. So then, of course, you should cash out lah. Okay, there's no right timing for this kind of a situation. Yeah, but if not, that's why you only invest in spare cash and the money that you have spare. If not, then don't touch the market. Okay, and so some people say, but short term, let's say you already buy and you got some spare cash and you're itchy hand and what can you do? So short-term trade, yeah, ST stand for short-term. Short-term trade can. So example, let's say Bank of America. Now Bank of America looking at the chart, you see, wow, this one like a pattern. Usually when you see this kind of pattern, of course you can squeeze and then go up lah. Okay, and you can also go down lah. We will never know lah. Okay, yeah. So if you think that the market, this one, actually this one hard to trade. If you think that the market, you have to believe that the market is going to go up lah. So if you believe the market is going to go up, you can buy here or you can just trade within this range lah. So within this range, maybe about $1 to $2 range. So once you make, you zao, you run away because this is for short term play only. Yeah. Then, but of course, if you believe it's going to drop, then you short lah. Until here, you short again lah. Okay. When you touch this line, then you buy. Touch this line, you short lah. Touch this line, you buy lah. But short term, short term. Okay. When you're wrong, what must you do? You must cut loss. This one, when you're wrong, you must cut loss. Okay. Because this one is for itchy hand one. Understand? Yeah. So when you are wrong, you must cut loss. If not, right, your losses can eat into your account big time. Yeah. So why is that so? And for me, short term, I'm not a very big fan of short term lah. Yeah. Why is that so? I do have three accounts. Yeah. One of my account is known as my short term account. This short term account you can see, I started off in about 2014. Okay, with about 60,000. You can see over here, right? Yeah. And in 2018, okay, I managed to trade until about 117,000. Yeah, 2018. Then in 2020, because I, I I took a break from 2018 to 2019. I actually took a short break. I didn't really trade. I'm not very active also. Yeah. Then there was one period of time whereby I'm quite incomeless so I got a lot more time to go and trade. And therefore, from 2019 last year to 2000 to February this year, right? Okay, not bad. You can see my account went up. But because of this COVID-19 or coronavirus, I'm not spared. I can tell you. Okay, I was wrong. Wow, see, only dropped by about. I lost about 40,000. Yeah, so actually I dropped about 50 plus thousand. Yeah, I dropped about 50 plus thousand. I cut loss. Yeah, because I went up. My value went up first, then come back down, and I have to cut loss. Why? Because this one short term. And if you look at it right throughout the years, okay, from 2014 to date, my average return is about 12%. From 2014 to 2019, if you haven't looked at this year end yet, my average return is about 22%. Not bad, right? However, I'm still not a fan of short term. It's just that, yeah lah, itchy hand. Sometimes when I see trade, wow, I must must take the trade because I feel you will make, right? Okay. But when you're wrong, remember to cut loss. No. Okay. This is the only time where I advocate cut loss. Yeah. Um. If what if you are in the midterm range? So this one, chances of it dropping to 16,000 range about 50-50, right? So you can do something. What can you do? Now, I shared with you right previously that we already hit this range before. Okay. And if let's say it's going to hit one time, I will repeat the same decision. So let me share with you my previous decision when it hit this range. What did I do, right? Okay. Now I'm holding on to IJR and I'm holding on to Tencent previously. Okay, so let me share with you. IJR, I bought it at $55. So I bought it at $55. Huh? Okay. And if the market were to recover back to $61, which is the high over here, right? I will only be able to profit and get the return of about 54%. And I bought Tencent about $45. So if $45, if you were to hit back the original high, okay, original high over here, right? Okay, it was actually higher lah. Yeah, I will make about 35% return. Yeah, so this will be the difference lah. And the market has really bounced back. Can you see? It kind of follow through the same. It will just recover. And I feel that if I want a higher return, I should look for maybe stocks, right, that's got great momentum. And this is why I look at Tesla. So I feel that Tesla has got great momentum. Can you see the momentum was so strong? And then when it dropped, so I believe that when the market drop, it will also drop. Like, can you see when the market drop, all also drop. But when it recover, right, I feel that this stock will recover faster. See, market already recovered about 50%. And Tesla recovered close to 100%. So if let's say I bought about 400, yeah, and at about when you go back to about 950, okay, I will be able to make a return of about 137%. Yeah. Oh yeah, I forgot to show you my account. Okay, for this one, I printed a statement. I forgot to put it inside the PowerPoint. Okay, hang on. Okay, so for this is what you can do. You can go and buy into momentum stock. So what do you mean by momentum stock? That means those stock, right? When the market recover, you recover faster, so that you make back your money even faster. Okay, let me just share with you my account. So for my account, you can see that I have about 95,000, and I sold off. So based on my current position, right, I sold off based on this balance. I sold off Tencent, I sold off IJR, okay, and I all see sold. Then I went and buy into Tesla, right? Okay, so when the market recover, boom, then what happened to my account? So see my account now, it's 165,000. Yeah, I started off with 150,000. So you can see it down, then after it went back up. So now I'm in the green again, okay? And that is how you can do it. But some people say, hey, buying all this kind of stock is not so safe lah. So you want to buy like maybe a safer bet like Facebook, safer bet. So for example, let's say you come back now, boom, then you probably hit this $133, right? This is a good range. If you go down somewhere, even better, right? Because this kind of stock is very, very strong. Okay, even when this coronavirus situation probably won't affect their revenue much. Yeah, and in fact, you probably will boost their business more because a lot of business now they'll be going online and doing a lot more e-commerce and they will advertise more on Facebook. So it will definitely benefit this kind of a company, right? Okay. And now what company don't buy? Some people ask me like, hey, how about Shell, BP, that kind of oil company, airline company? No, don't. Okay, because this kind of a industry can stay down very long one. No? You can see, this oil industry, this is the shipping industry, okay, since 2008, right? Okay, affected until now, haven't recovered, and it's going worse. So therefore, this kind of industry can you stay out, lah. Okay, this kind of I don't have confidence. I don't know much about it. Therefore, anything that I don't know, I stay out. Like Bitcoin, I don't know, I also stay out. This one, chances of chances of it being like that, then probably will also be high, right? Okay, for the last so many years, it has been down. Then some people say because last 10 years been down, so now it will boom go back up. Wow, this one big bet, leh. Okay, this kind of big bet, I dare not bet, okay. And you can see oil, okay, when the market go up, right, oil can go down one. Can you see? This is market, this is oil price movement. So therefore, I don't like anything that will be going divergent. That means when the market go up, I want this stock to also go up. Then for me, easier for me to understand and for me to track and for me to have a winning rate. My edge is the market analysis, man. So when the market go up, this one go down, then don't want, that's very hard for me to trade. Okay, and Now, what if it is the worst case scenario, right? Okay, so what can you buy into? When let's say really the market come down a lot, you can buy into, you will be able to hold cash, right? Okay, and what you will do is split your capital into three. You buy some here if you haven't buy lah. You buy some here, you buy some here, you buy some more here. If you already bought in, you can do some short-term trade if you have cash. If not, don't do anything. Maybe rebalance again and buy some more here. But what do you buy? You can buy into, okay, sell those companies that you feel because of this incident then probably will affect the business. You can buy into companies with very strong cash flow and low debt. Now take note, the debt, right? Look at the short-term debt and see whether the cash flow can cover the short-term debt or not. Because if let's say when the economy is down, cash is king, and the debt will still come out. And if they are able to cover that, then they should be fine. The other one is look at those companies that revenue unlikely to be impacted during the poor economical situation like Coca-Cola, that kind, right? And buy into company with a good story behind that means you know that this company has a very high chance that it will grow. There's a lot of things that are coming up like Apple, Okay, so these are the companies that you can look into lah and do your homework. So far, so good. Yeah, and there's one particular scenario that no matter what, I will do nothing. No. Okay, so what would it be? Now, my biggest portfolio, my biggest portfolio, about 80% of it, it's my REITs. You can see that every quarter, right? Okay, like for example, from Jan 2000 to March 2000, okay, my dividend I collected is about 12,000, about there. Yeah, so on average, right, per year, I collect about 50 over thousand, about there lah, okay. So right now my holding position it's negative two, mine I lost about 200,000, but I'm still not selling anything. If I'm gonna do something, I'm gonna just average down more if I got a fund. Yeah, my dividend is about 7.2%. Okay, so everyone has different investment strategy. So for me, right, I'm looking at capital gains, but if you look at my portfolio structure, it's more for income, not so much for capital gains. Okay, so it depends on you. And I hope that with my sharing, you have some idea about what you are going to do. And I hope you really enjoy what I shared. And I promise you all that I'm going to share my portfolio. Really, it's a bit stupid to share my actual portfolio, but I hope you understand I got nothing to hide. I am not trying to make money from you all. I'm just looking to share my mistake, and hopefully everyone can benefit from a mistake, also learn something and make money together. Okay, and I'm Jason Stronghead signing off. I will see you again next week. Bye bye.